Jonathan Ruiz, your accounting coach, Survival Tips. So today, I would like to continue with our lesson for financial statement ratio analysis. Market value ratios are usually used to analyze stock trends. Okay, so for example, a company with low price earnings ratio may indicate that stock is an undervalued bargain in a stable industry. But it could also indicate that the company's earnings prospects are relatively uncertain and the stock overvalued, undervalued, or price is fairly valued. Okay, so what are the ratios under market value? So we have earnings per share, book value per share, market value per share, price earnings ratio, and the dividend yield ratio. So first, for earnings per share, measure a company's net income per share of outstanding stock. So the company's net income by the number of outstanding shares. These outstanding shares is the stock currently held by shareholders, which is book value per share. The book value is a company's equity, okay, divided by the shares outstanding in the market. So in this calculation, you don't include the preferred stock. Okay, so for example, if a company's total assets is 15 million pesos and total liabilities equals to 5 million pesos, then the total equity would be 10 million. If the company has 2 million in preferred stock, then you need to deduct it. You get 8 million available to your common shareholders. So if there is 1 million outstanding shares, the book value per share would be 8, meaning 8 million divided by 1 million. Next is the market value per share. Okay, so this is the market value of a company divided by the total number of outstanding shares. Actually, this is simply the calculation of the rate of a common stock. For example, the market value price in the stock market is 8, and then the outstanding shares is 1,000. So you just multiply it and you just get 8,000. Okay, now price earnings ratio. The price earnings ratio is the current price of the stock divided by the earnings per share. Okay, so this means earnings generally are calculated by looking at the results of the company. Next is the dividend yield ratio. Analysts arrive at the dividend yield ratio by dividing the total dividend payments paid per year by the market price of the stock. So, okay, if you know this ratio, this will help you understand the return on your investment. Okay, so those are the lessons for today. But please tune in with my YouTube channel. I have some surprises that is coming up. Since I'm inspired, so I'm putting up a very special online course for those that are asking. Please help me with the taxation. Okay, I will start with tax and then move on with other.